Welcome to Java and thank you kindly for joining me. It's August 4th, 2026. It is also Tuesday. Now, I had started really early this morning, but there is a massive amount that is coming out, not just the stories that we're seeing in the headlines, but also I'm seeing a lot in the background that I want to make you aware of. So I hope that you get to watch this to the end. There is a lot of information in this one that I've kind of drilled down, and then if you want any details on any of this, you can either look it up or feel free to hit me up in the comments. I want to keep this short so that you can be aware of at least the larger portion of what's going on here. Now, banks, bonds, and buybacks, because there's massive amount going on aside from this quote unquote war that is happening. But as I'm writing this, cargo ships struck in the Strait of Hormuz after the threat of decapitation of Iran by President Trump. Now, talking about talks, strikes going back and forth. This is a whipsaw for the market and also a selling point for his early access to his news that we spoke about yesterday. But with all of this, let's take a quick look at the markets and what they're doing. Now, fear grade meter actually neutral record highs in the market. We struck them yesterday and they're looking like they're heading up again despite all of this going on. So this is very much looking like a bit of a melt up phase. The constituents behind this, as I've spoken about before, for the large part, hedge funds and the larger institutional money kind of sitting on the sidelines waiting for the deals. Now, we had a little bit of a touch of this when Citadel, the Ken Griffith, the one that bought up the hedge fund situational awareness. Now, I spoke about this a couple of days ago, but what happened is they over leveraged, even though they were correct about some things. They were causing a good portion of the run up as they were leveraging, purchasing, and leveraging further on these AI stocks. Now, since they had to sell on the cheap, that did cause a bit of that deflation that happened a couple of days ago. So let's take a look. 10-year yield up again. We've got relative strength of the dollar is up. We, as the United States, is in active intervention in foreign currencies, meaning the yen. So we'll talk about that in a bit and the effects. But for the moment, futures saying stocks are headed higher. Crude coming down a slight bit. That could be affected by headlines, not as much as it has been in the past few weeks. Now, cryptocurrencies holding quite well even after the hack. So this is showing a good bit of strength, and it's also showing that those that hold this asset have a better understanding of it than being frightened out of it from these kind of surface attacks, if you will. Not to mention the amount of institutional money that is also in this, as well as precious metals for real assets, not just equities or, as we say, stocks. So we've got earnings in stocks that are kind of propping up this and shoving this up into this parabolic spin up with these all time records highs. We are expecting the JOLTS data, jobs this morning. We'll be looking at that calendar. Now we've got oil and talks. Crude is up now on its last chance that there could be peace deal here. Now, don't kid yourselves, because even if peace does happen to, I'm going to use the term erupt in the Middle East, don't expect it anytime soon. There will be a hot flashpoint elsewhere because we need this war to continue. And this is in order to drive the continuing print of the currency. The currency is in danger. Now, another line that came out publicly that I'm certain they don't want this out, United States Army has used all of their long-range precision missiles. So they're out. So this is going to be a little bit of an awkward thing when they're talking about strikes versus their talks. Now, another key issue is now the G7 of nations is now spending more on interest on their debt than they are on their defense. So this is a massive tell on what has happened with their national debts, and the combination of this, that is more of a threat than any of the bombs are, because this debt bomb mechanism that is about to crush the currencies is it's a big issue. Now, Palantir, want to speak about them for a moment. They're up very well this morning. They are a massive benefactor of all of this defense spending. They are artificial intelligence war type of stock, saying they are up on otherworldly gains. They literally use the word otherworldly. I think this, my personal opinion, this stock, it is, yeah, definitely coming from well below um, fiery realms, propping this one up and purchasing from that for all of the deaths that they're causing. So with this, we want to take a look at M2 is the capital flow. Where is this money flowing to? So we've got oil was massive trade, AI, chips trade. We'll take a look at those in a moment, because if this money flow halts, it will lock up the economies and that will cause the spiral. So they're doing anything they can, including active intervention in other currencies. Now, back to oil. Now, this is a shock with all of the fear that they put about the oil and this cutting energy for the world, in short, globally. Saudi Aramco came out saying that there is no operational impact to them as of this war. So all of the stories you're hearing, the market is waking up to this, and that's why these impacts of what they're saying about the talks is not hitting like it used to. Now, one thing we do have is that the larger banks are now beginning to warn more of this bond route, because no one is purchasing the treasuries. That's why the yields are beginning to go up, because it is only this self-buying loop that's keeping it going. Hedge funds are liquidating. We've got capital is constrained. Now, HSBC is talking about buying back their own stocks on cost savings. So, air quotes, cost savings. So, what that means, the short of it, these banks are in trouble. They've got to rebalance these balance sheets before they've got to report. And there is a lot more, as we say, these cockroaches that are coming out. So Citadel purchased situational awareness, pennies on the dollar, shifted all of those assets onto their balance sheet. They're looking quite well now. We're going to see more liquidations from these over leveraged funds. You're going to see more issues with these banks, and that is going to ripple out from there. We've also got a company called Prologis. Now, in short, they're kind of, you could say, a real estate corporation, a little bit more with these data centers. It's also commercial. They are now taking over Segro. So this is more cannibalism, the merger acquisition we're going to see going forward. Now, on this is a semiconductor company, onsemi. They're up on data center demand. Now, this is kind of a one-time deal, even though it's going to be going forward for some time. All of that capex spend is building all of these data centers and all of the stocks that are following these, but the construction down to the cement, down to the servers and the chips. Once a lot of that structure is built, it's going to be one time, it's not going to continue. So you can see the institutional money kind of looking forward on that. So going back to energy, chips as a whole are down in Asia. Asia markets a bit soft this morning. They are not buying the dip. That's the important part to know. That whole buy the dip mentality is weakening massively. There's more competition. SK Hynix was a large one in South Korea. CXMT is the new chip manufacturer, kind of providing competition that brings down prices. Now, Snap is coming out, Snapchat. They've got augmented reality glasses that they're coming out with and expecting large sales. I don't know about that. That's a discretionary spend, but I don't like the idea of the artificial reality. May as well make it what it is, because all of this is absolutely artificial. Now, they're also coming out, United States is putting a ban on China data center components because they're talking about a security issue. This is just another way to manipulate that trade. And it's one more way that they can kind of hold into this currency and shift things under that shell game to keep it propped up for longer going into the midterms, because it's all political issues with this. Now, with SK Hynix down, and some problems with that. They've got massive inflation issues in Korea as well. Bank of Korea talking about hiking. Bank of Japan is going to hike. It's only a question of time, whether it's October or possibly September. But the yen has currently gone this manipulation with the help of Scott Bessent. We've got the yen at 155, seems to be the level they're trying to keep this at for now. So we're always going to stay with Japan. Why not? Because they own over 1.1 trillion United States treasuries and contain car markets. So of course we're going to be friends with them because they kind of got us by the short of it. Now, of interest, we've got our calendar, job openings, labor turnover survey, factory orders, and then also the ADP coming out tomorrow. Now, American manufacturers, yesterday we got out the PMI saying they're growing at the fastest clip in 4 years due to AI boom. Again, as I said, this is not actual manufacturing. This is production as far as building for a one-time type of deal. Because once you build that data center, you're going to need some upkeep. But the large spend is on that initial build. So we're going to see this retrace, I believe. It's just a question of when. No one is bringing this up yet, but it is eventual. It's going to be a while out, don't get me wrong, but it's going to happen. And this is a cure saying high prices are the cure for high prices. That means it creates demand destruction, because if you go too high, your consumer either runs out of money or decides it's not worth the value, either one, whether it's by their decision or they don't have the decision, meaning they can't afford it. The demand goes down and prices then must also come down. So we've got a little bit of a structural example of that. People are saying it's difficult to be hopeful. How people survive under one of the worst inflation rates in the country. Now, McDonald's came out with their earnings saying that they still have decent sales. However, people are visiting them less. So discretionary spend already beginning to come down. Now, Caterpillar, those are the bulldozers company. They're really kind of tied in with all of this data center back to the building of that. Their earnings kind of float in the market this morning. SpaceX reporting after the close of markets today. So I expect those to kind of build a little bit more movement. That's why we're seeing these stocks up right now. Jeff Bezos just reported he's selling over $4 billion worth of Amazon stock because he wants to kind of liquefy it a little bit more. So that doesn't make sense if he believes that going forward would be strong. He doesn't exactly need that pocket change for him. So with all of this strong manufacturing data yesterday's, but McDonald's coming down, we are also having artificial intelligence facing some headwinds. This is going to be regulation. Now, Google, OpenAI, and Anthropic are going to have a meeting with White House about artificial intelligence safety. We'll see what comes of this later, but this could cause a little bit of shocks here going forward. Definitely the regulations of how all of this is going to come together. So with all of this, got to let you go. I know this has run on a massive amount of information. So until I see you again, my friends, resist.